the hopes that a highly indebted part of the global economy can bail us out?
Well, the consumer in the US and Europe and even in the UK, now there's election clarity and Brexit clarity, actually looks pretty good. But in terms of the potential for explosive growth, it's not in these developed economies. It's in Asia potentially, and over 1 billion Chinese people still with a long way to go to catch up to Western.
Cup after they beat Dundee United 4-2 in their replay. Christian Deutsch scored a hat-trick to book the Premiership team a last 16 tie against BSC Glasgow. Falkirk are also through and will play Hearts in the next round after their 2-0 victory at home to Arbroath.
That's your European sports. Still ahead on Bloomberg Daybreak Europe. Apple kicks off a week of big US tech earnings with a beat, but also a wider than expected forecast amid concerns over the coronavirus. We discuss that next. And in terms of the reaction in markets over the widening coronavirus concerns and lots of corporates already taking action, the Stock 600 not posting the same gains as yesterday.
Message and data rate may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
IBKR is the professional's gateway to the world's markets. Enhanced price execution via IB Smart Routing and access to our powerful trader workstation, web, mobile, and API trading platforms. In addition, our clients enjoy the lowest cost access to stocks, options, futures, Forex, fixed income, and more on over 125 markets in 31 countries. Learn more or open an IBKR integrated investment account at ibkr.com.
I'm a 40-year-old man that walked in there to get his high school diploma. It was very hard for me, but Miss Araceli, she gave me direction.
At age 47, Marco finished his high school diploma.
50% of getting your high school diploma is walking through those doors. The other 50% is doing the work.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Influential conversations from Bloomberg Television. Here's Paul Allen.
Let's get some more now on how the coronavirus is affecting markets. We're joined by Kamal Srikumar, Global Strategies President at Srikumar Global Strategies. Some very big catalysts here to talk about, haven't we? We've got that huge earnings result from Apple, but then on the other hand, there's a killer virus on the loose. So what is the bigger catalyst here in your mind?
First of all, beginning with Apple, since you mentioned it, Paul, the fourth quarter earnings that Sue talked about, the strong earnings numbers, is looking back. It was the fourth quarter of 2019. Now, as you look forward, 2020, I think Chinese growth was slowing, and as a result of the coronavirus, there is probably going to be even further slowing to the extent of as much as 0.5 percentage point on the Chinese side. Particularly affected is going to be the consumer sector as a result of what you see taking place with respect to all of the difficulty in reaching your store, traveling from one place to the other. So we still don't know what the impact is, but China-oriented companies, with Apple being one example, are all going to be this is something they'll have to deal with during this year.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings.
This is Bloomberg.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in London, I'm Sandra Kilhoff. Time for a Bloomberg Radio Business Flash. Now over to the First Word breaking news desk in Berlin. For today's morning call, here's Richard Jones.
Good morning, Sandra. It's been a broadly positive session for equities in Asia today, although several regional markets remain closed. The Nikkei 225 closed higher by 0.7%, with the Nikkei higher by 0.4%. The Hang Seng opened today after the Lunar New Year holiday, trading lower by 2.8%, playing catch-up with the sharp moves seen in other markets earlier this week. The E-mini S&P and E-mini Nasdaq futures are both inching slightly higher, both up by 0.3%. European equities are edging higher at the open as well, with the Euro Stoxx 50, the DAX, CAC 40 and FTSE 100 all trading higher by 1 to 0.2%. Turning to the bond markets, the U.S. 10-year yield is 2 basis points lower at 1.64%, with the 10-year German bond yield 2 basis points lower at minus 0.36%. In the FX space, the Bloomberg Dollar Index is little changed, with most G10 currency pairs trading in tight ranges. In terms of European economic data, we've already had German import prices print in line with expectations. German and French consumer confidence come in above survey consensus, with Swedish consumer and manufacturing confidence mixed. Additionally, the UK's Halifax house prices came in stronger than expected. Still ahead, we get Swedish household lending, Euro area M3 money supply, and confidence in PPI readings out of Italy. That's it from me. For more macro breaking news, it's SQUA Go on the Bloomberg Terminal. Sandra?
Thanks, Richard. That's a Bloomberg Business Flash. Now, back to Caroline Hacker with the World News.
Great stuff. Thank you so much to Sandra Kilhoff there for the flash. Let's talk you through one of our top stories then this morning concerning Apple. It gained in late US trading after issuing a better than expected sales forecast. Sales in the current period will be $63 to $67 billion. And while that's higher than analysts predicted, it's actually also a wider range than the company tends to forecast. The CEO, Tim Cook, said that it reflects, quote, uncertainty caused by the coronavirus outbreak. Well, for more on this, we're joined by Bloomberg Intelligence's senior tech analyst, Matt Bloxham. Great to have you in the studio. Why do you think that Apple has been able to deliver, first of all, such a big positive turnaround in iPhone sales? It was really quite an impressive year.
Yeah, that's right. And, you know, complete contrast to this time last year where they were cutting guidance and reducing their disclosure on volume sales. So it's been a big year. And I think the main reason is because of the upgrade cycle. The iPhone 11 was a much stronger device than the iPhone 10s that they announced the year before. Mm-hmm. And I think, you know, people's kind of replacement cycles are extending as well. So you had a kind of combination of, you know, a lot of pent-up demand and a much better product. Got lots of people excited about it. And don't forget, they've also started to do a lot more things around trade-ins. So you can take your old phone back, get $100 or so back for that. Mm-hmm. And they've also started to do these interest-free payment plans. So they've made it easier for people to buy these phones that, you know, cost between $800 and $1,000.
The downside to this, or the flip side that we'd want to talk about, is whether the demand for iPhones is sustainable, but also actually the services revenue was a reason that the share price gains were limited. But before we get on to that, I've just got to bring up coronavirus, because this is catching the attention with all corporates this morning, and Apple preparing for potential production loss and giving a wider sales forecast. What is the potential impact on Apple of the coronavirus? Not just uncertainty, but actually the concrete impact in the supply chain?
Yeah, so I mean, I think we don't know for sure, but you know, factories typically have, you know, between 2 and 8 weeks of inventory. So you know, I guess if this ends up being a relatively short-lived health scare, then maybe they'll kind of, you know, sell through it with not much notice at all. But yeah, clearly, if you know this really turns China into a much bigger lockdown, then that's a potentially a big problem, not just for Apple, but for lots of, you know, people that make kind of high-tech goods. So we'll have to see. You know, hopefully the measures that are being put in place will kind of contain this. Yeah, I'd say, you know, that definitely the revenue guidance range is wider. It's about $4 billion. But if you look at the last 4 or 5 quarters, actually, it's been $4 billion. Well, this time last year, it was $4 billion before. And okay, that was an uncertain period too. You know, it's been $2 to $3 billion. So it's a bit wider, but it's not much wider than we've seen before from them.
Yeah, interesting, because Tim Cook mentioned, you know, the fact that obviously it's cutting retail traffic, you know, the virus, and also that the suppliers are based in Wuhan for Apple. So that is kind of pretty crucial to factor in. But just kind of in terms of the rebound of iPhone sales, to that issue of sustainability? Yes, a great holiday season, but what about 2020?
Yeah, I guess the interesting thing here is this is probably going to be the first year we see a 5G phone from Apple, and I think that's why people were a bit surprised about how strong 2020 was, because it was still a 4G phone and all their major rivals were coming out with 5G phones. So it might actually be that they can sustain this year if they come out with an attractive 5G phone. The other thing that people are wondering is whether this is going to be the year they start to do more clever things with the screen. We saw last year at Mobile World Congress in February, and we've got that coming up again soon. People like Huawei and Samsung come out with foldable devices. At some point Apple's going to come out with something similar, and the question is whether that's going to be this year in combination with 5G. So maybe this year for sure could still be a strong year given that kind of fresher product cycle.
What's the outlook for the rest of the business then, other than iPhones?
Yeah, so wearables has been really strong, and I think it's similar issues that they've had a really strong product lineup this year in the last 12 months with the kind of upgrade to the iPhone, the new noise cancelling iPod headphones. So that's really strong. We'll have to see whether they can kind of keep that going with another kind of really attractive round, but it may be that they've had their kind of strong year and they'll be a little bit softer. We'll have to see. Services, is growing strongly, but it was slightly softer than analyst expectations, but they're still on track to hit their own internal targets. They launched last year a huge range of new services like music and gaming and TV. So, it's looking healthy.
Okay, that on Apple. Just briefly on the big story in the UK, Huawei. UK backing limited Huawei purchase for the 5G network. How's it actually going to affect the rollout?
I think it won't really affect it very much at all. I mean, this is the decision that everybody expected. It's what the operators wanted. And if you look at the detail of what the advice says, it's 35% share of the access network on a kind of national basis. So I think probably in the short term, the carriers will be able to continue to use mainly Huawei kit, and then on a kind of 2 to 3 year basis start to add in more Ericsson, Nokia, maybe Samsung kit to kind of build it out, and then they'll kind of get to this 35% share limit over time. So I think this is kind of the best outcome from a kind of UK PLC perspective, but also from a carrier perspective.
Great to have you with us. Thank you so much for joining us. Bloomberg Intelligence's senior tech analyst Matt Bloxham, and we were discussing Apple. It did gain in after hours and pre-market. Looking at the rest of the markets, a little bit of green on the screen, but not quite the gains that we saw in yesterday's session. 25 minutes into the equity market open in Europe. This is Bloomberg.
This is a Bloomberg Money Minute. With its 737 MAX still stuck on the ground, Boeing is poised for what one analyst calls an absolute disaster when it reports its fourth quarter earnings today. Profit estimates have plunged more than 70% over the past year. Boeing has lost roughly 25% of its market value since the second MAX crash last March. More of us are getting our morning coffee at Starbucks. The coffee chain last night reported a stronger than expected quarterly sales gain. It also said it has closed more than half of its cafes in China in response to the coronavirus. McDonald's opens its books this morning. The fast food chain is giving franchisees what they've been asking for, a breakfast chicken sandwich to better compete with Chick-fil-A and Popeyes. Analysts are forecasting a fourth quarter sales jump for McDonald's versus a year ago, as customers spent more at each visit. Worries about the coronavirus eased on Wall Street yesterday. All of the major averages are coming off solid gains. Larry Kofsky, Bloomberg Radio.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
In the world of financial advice, speed, clarity, and foresight aren't just nice to have, they're required to survive. Adipar provides advisors the real-time portfolio reporting and insights required to realize the goals and personal potential for their clients. Trusted by thousands of wealth advisors, from family offices, RIAs, and large financial institutions, Adipar helps you make better, more informed investment decisions. To learn more, visit us at addepar.com.
Why has J.D. Power ranked Commonwealth Financial Network #1 in independent advisor satisfaction among financial investment firms for the 6th straight time? We think it comes down to one thing: you.
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
Boredom. Fitness enemy number one. So don't just run. 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 Mix it up. Skip. Run. Skip. Run. Give yourself a lift. Mix it up. Lift. Mix it up. Run. Lift. Splash. Skip. Lift. Run. It's crunch time. Skip. Mix it up. Run. Mix it. Add a boxing class. Skip. Run. Splash. Skip. Run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run. Mix it up. Skip. Mix it. Run.
Mix it. Let's get this right, sir. You didn't see three men dressed as clowns take off in a van with a Renaissance painting because you were distracted by, and I quote, a sporty red compact SUV with a bold mesh grille, a sculpted bonnet with sweeping roofline on diamond-cut alloys.
And beautiful rear haunches.
So, you saw a Jaguar E-Pace. But what about the clowns?
What clowns?
Jaguar E-Pace, designed to steal attention. Search Jaguar E-Pace.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL. Every journey matters.
Broadcasting live to London on DAB digital radio. To New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Europe.
8:30 a.m. in London, 9:30 if you're listening in Paris, Frankfurt or Brussels. Good morning, everyone. I'm Naira Chehich.
And I'm Caroline Hebke. You're listening to Bloomberg Daybreak Europe.
A second day of gains for European equities, 30 minutes into the stock market open here. We're up almost 0.5% on Europe's equity benchmark. On the stock 600 in terms of industry groups, all but one in the green. Food and beverages in the red, but banks, commodity producers and car makers leading on the upside. Across regional equity benchmarks, the FTSE 100 is up 0.4%. The CAC 40 up by the same. The DAX higher by 0.25 percentage point. The FTSE MIB 0.5% higher. The IBEX leading up 0.8%. The focus perhaps turning to earnings. Yesterday we saw a big bounce back in US equities. The S&P 500 gaining 1% after its worst loss in 4 months. Futures point to a more muted open but still green on the screen. Dow futures up 0.25 percentage point. S&P and Nasdaq futures up at least 0.3%. Investors still trying to assess the likely impact of coronavirus as more and more companies take steps to mitigate the effects. The 10-year Treasury yield is down 1.5 basis points after gaining 5 yesterday, 164 handle. So the bond market seemed to be painting a gloomier picture. The 10-year Bund yield down 1.5 basis points, negative 35. 10-year gilt yield is steady. In G10 FX, you're not seeing a whole lot of movement. The yen is the best performer, but dollar yen pretty much flat. The Kiwi dollar underperforming. Turning to the oil market, so oil has been under pressure with concerns around demand from coronavirus, but then attention turned back to stockpiles and WTI and Brent gaining today. WTI up 1.25 percentage point, 54.16. Brent at 60.24, up 1.2%, and gold trading flat.
Well, speaking of that coronavirus in China, a grim milestone in the outbreak. There are now almost 6,000 confirmed cases of the deadly coronavirus. That's more than the official number of infections in China during the SARS epidemic back in 2013. At least 132 people have died. Governments have ramped up efforts to stop the spread of the virus. They are tightening international travel and border crossings with China.
And speaking of the corporate reaction, Toyota is joining companies that have halted operations in China because of the coronavirus. The automaker is putting Chinese production on hold till February 9th. Toyota also have restricted travel to Wuhan at the epicenter of the outbreak. And we've really seen reaction across industries, Caroline, and the obvious ones being airlines sort of scrambling to deal with the impacts, financial services, companies asking employees to stay home, Starbucks closing 2,000 stores in China, which is about half the number of stores they have there.
Yeah, with the airlines though, it's a bit chicken and egg. It's sort of cutting flights, but then also seeing a massive drop in demand. So not quite sure whether it's purely based on demand or whether it's also on health grounds. But yeah, certainly a lot of reaction. Luxury goods makers, as you say, one of the key sufferers. Obviously, we've seen companies like LVMH drop. But there is, of course, another decision out today that will be of interest to markets. So the Federal Reserve policymakers expected to keep interest rates unchanged. They wrap up a two-day meeting today. The Fed Chairman Jerome Powell is likely to face questions about the central bank's plans to slow its asset purchases, and also, no doubt, questions about coronavirus and the impact on the global economy.
And the coronavirus cloud has also hung over Apple. It reported holiday quarter revenue that beat Wall Street expectations, but its guidance was somewhat affected by the uncertainty of coronavirus. The story from Bloomberg's Charlie Pellet.
Apple saw rebounding iPhone demand along with surging sales of wearable devices. The results marked a remarkable comeback from a year ago when the most valuable technology company missed its own targets. Apple shares have gained in recent months on increasingly bullish expectations for new iPhones, AirPods, along with revenue from iCloud storage, the App Store, and other services. Under CEO Tim Cook, the company's strategy has evolved. It now aims to sell new handsets to customers every 3 to 5 years, and then offer as many services and accessories as possible in the intervening years. In New York, Charlie Pellet, Bloomberg Daybreak Europe.
And now those are our top stories. Let's bring you one of our big interviews, though, from this morning, because speaking of the coronavirus, it's not expected to hit the supply chains at Swiss pharma giant Novartis. That's according to the CEO, Vas Narasimhan, who says that the company is taking steps to protect employees. He spoke to Bloomberg's Anne-Marie Hordern as the firm forecast rising profit and said that 2020 sales are expected to grow in the high single to low double digits. Anne-Marie asked him how quickly, though, we could see a product actually to combat the coronavirus on the market.
In the near term, the biggest opportunity will be testing existing antiviral drugs, and many firms that have antiviral medicines are currently providing them to the Chinese government to currently test whether or not these drugs would work to contain such a virus. And then over the next 6 months to a year, I would expect vaccine candidates to be developed and then ultimately put into testing and then be broadly available.
So in a year, we could potentially see a vaccine for this?
I would say that's in the range of what you would expect, but I think it could take longer. It all depends on the underlying biology and the science.
Now, I know you said that there's no impact right now on your supply chain, which many people are worried about for the pharma industry, but what has been your conversations like the past week with your employees and your distribution centers, et cetera, in China? What preemptive measures are you taking?
Our number one concern is our associates in China, and there we are aligned with what the government has advised, keeping our offices closed, asking our associates not to travel and not to engage at the moment with all of their various stakeholders in order to protect themselves from this current situation. In terms of our supply chain, what we see right now is a very stable situation. We have safety stocks for all of our key medicines. Most of our key suppliers as well are far away from the center of this particular outbreak. So we feel very good with where we are in the supply chain. I think the key is we'll have to just closely monitor the situation. Right. It's obviously very fast evolving.
Now, I want you to put your white coat on. You're a medical doctor by training. The World Health Organization decided not to declare this a health emergency. Right. Do you think that that's going to have to change?
Again, it's very hard to predict. When you look at the cases right now, they're predominantly in China. You don't see sustained spread outside of China from person to person and other geographies. So I think that's what the WHO is really looking at. Is this contained to a single geography within China, or is this really a situation where we see sustained person-to-person spread outside of China? And I think the data is what's going to drive the decision.
And there's finally on this, the vaccines for these diseases are so hard. Pharma industry make this lucrative.
This is a long story, it goes back decades. I mean, if you think even back 1997, we had H5N1, then we had SARS, then we had H7N9, H1N1, MERS. These viruses keep popping up. The challenge is, when they pop up, we have a big response. You see firms crowding in to try to develop new technologies. But then when the viruses start to go down and the cases start to go down, everybody loses interest. And so the real challenge for public policy is how do you maintain capacity and innovation power in between the outbreaks? And we still haven't solved that as a society.
Okay, so that was the Novartis CEO Vas Narasimhan speaking to Bloomberg's Anne-Marie Houdin with some interesting views on public health policy and also Novartis' own combating of coronavirus.
Yeah, Novartis shares in this session are up 1.1%. Let's get the latest in global news. Here's Bloomberg's Leanne Gerrans. Hi, Leanne.
Good morning, Naira. President Trump has announced a plan for the Middle East peace. He says it provides a win-win solution to make Israel and the whole region safer. But the Palestinians have already said it's a non-starter. The two-state solution would leave an undivided Jerusalem as Israel's capital. It would also give a green light for Israel to annex existing West Bank settlements. Here in the UK, Boris Johnson's government plans to reclaim control over British fishing waters, with a law allowing the UK to decide who can fish in its waters and when. The legislation published today will end current automatic rights for European Union vessels to fish in British waters. That's according to the Department for Environment, Food and Rural Affairs. The UK will leave the EU's common fisheries policy at the end of December after an 11-month post-Brexit period has ended. Canberra, Australia's capital that's surrounded by bush, is facing its worst fire threat in 17 years. That's as a blaze sparked by a military helicopter approaches the city amid heatwave conditions. Bloomberg's Jason Scott reports.
Residents in Canberra's southern suburbs should be vigilant about the out-of-control fire, authorities say. The capital is again shrouded in thick smoke that's plagued much of southeast Australia for months in an unprecedented wildfire season that's burnt out land almost the size of England and killed at least 31 people. Temperatures in Canberra are forecast to reach 42 degrees Celsius on both Friday and Saturday. In Canberra, Jason Scott, Bloomberg Daybreak Europe.
And a magnitude 7.7 earthquake has struck south of Cuba, triggered evacuation warnings across the Caribbean. It also sent office workers fleeing in Miami's financial district. Islands across the region are urging residents to move away from coastal areas. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Caroline.
Thank you so much, Leanne Gerrans, there with the world news. And now coming up next on Bloomberg Daybreak Europe, Colin Asher, senior economist at Mitsuho Bank, will be joining us. We've been asking all of our guests really for their views when it comes to coronavirus. It's still very early days, but obviously a big concern about the human and economic impact of the spreading virus. And also we can discuss the Fed and any decisions or what will happen in the press conference, certainly this evening.
Yeah, and in the meantime, we are 40 minutes into the equity market open and seeing some green on the screen on the Stock 600, up 0.4%. This is Bloomberg.
You're fierce. You take care of business and don't hold back. Taking care of your health shouldn't be any different. You know when something's off. Don't ignore symptoms like fatigue, joint pain, and rashes. Listen to your body. It could be lupus. We're here to help you take control. Learn how at BeFierceTakeControl.org. Brought to you by the Lupus Foundation of America and the Centers for Disease Control and Prevention.
GEP, AI-powered cloud-native digital transformation. Hundreds of Fortune 500 and Global 2000 companies work with GEP to transform their procurement and supply chain operations. Why? GEP's unified digital platforms, smart, intuitive software that business users love, drive up adoption, user satisfaction, and productivity. GEP helps CIOs drive real digital transformation and achieve amazing results. GEP, helping the world's best companies. do better.
Rich is just a really good guy. The term good egg isn't enough to describe him. He's also certified organic and free range. Rich puts the cap back on everything. The toothpaste, the olive oil, the shampoo, everything. He lets his 10-year-old nephew beat him at virtual tennis, even though he can straight up slay his 10-year-old nephew in virtual tennis. When the toilet paper is running low, Rich replaces the roll on the actual holder, not just on the back of the toilet. Rich is texting and driving. Rich? No. What are you doing, Rich? I was just telling everyone how great you are. Texting and driving makes good people look bad. Visit StopTextStopWrecks.org. A public service announcement brought to you by the National Highway Traffic Safety Administration and the Ad Council.
Asset managers who sees change.
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
Boredom, fitness enemy number one. So don't just run. Mix it up, skip, run. Give yourself a lift, mix it up, lift, mix it up, run, lift, splash, skip, lift, run. It's crunch time, skip, mix it up, run, mix it out of boxing class, skip, run, splash, skip, run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run, mix it up, skip, mix it, run.
Mix it. At Asda, our baby event is now on. A 47-pack of Pampers Premium Protection size 3 nappies was £7, now £4.25. And a 12-pack of sensitive wipes was £10, now £7. Big baby brands, tiny prices. Don't compromise. Asda, save money, live better. Selected stores and lines subject to availability.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Hello, I'm your captain for today's Virgin Atlantic flight. Please drop everything and pay close attention to the following announcement. The sail is now on. Our crew are ready to take your bags and stresses away. The cocktails are ready to serve, the movies are loaded, and we're all set for takeoff to the Caribbean. So, take your seat in our award-winning economy class. We're ready to go when you are.
The Virgin Atlantic sail. Fly amazing for less. For more details, visit virginatlantic.com.
Want to kit out your new kitchen for less? Get to B&Q. We've 20% off all kitchen sinks, taps and appliances when you spend £2,500 on a beautifully designed and affordable good home kitchen. Hurry, offer ends 2nd of February. You can do it when you B&Q it. In-store orders only, maximum 10 appliances, excludes clearance, see DIY.com.
Welcome to whatever this is.
Introducing Sky Comedy, the new home of U.S. comedy. We've got a great lineup of brand new shows like Miracle Workers with Steve Buscemi and Daniel Radcliffe, and The Righteous Gemstones with Danny McBride and John Goodman.
Praise be to He.
We've got talk shows straight from the U.S. like The Tonight Show with Jimmy Fallon.
What are you talking about?
Ballers and Curb Your Enthusiasm are back with new seasons. This is Sky Comedy, the brand new home of U.S. comedy. Funny every damn day.
Treat yourself.
Chilly January days in London are tough enough without a broken boiler. Keep
Keep your home warm and working this winter with 2 years interest-free credit and your boiler installed by one of our expert engineers. Plus, you'll get a 5-year British Gas warranty. And we can even quote by video call after work or on weekends. Get a quote by the 29th of February, and you can also get £200 off a new boiler, or £400 off for our existing home care customers. Search British Gas New Boiler. Conditions apply.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in London, I'm Sandra Kilhoff with this Bloomberg Radio Business Flash. Now, it's a sea of green across European equity markets this morning. The Stoxx 600 up 0.4%, the FTSE gaining 0.3%, the DAX up just 0.1%, the CAC 40 up 0.3% in Paris. It follows a bit of a rebound on Wall Street yesterday. That's also why we're seeing US futures pointing to a higher open. But it was a bit of a more mixed trading day in Asia, where Hong Kong's Hang Seng traded for the first time since the Lunar New Year and did close down 2.8% as investors still mull the impact of that spreading coronavirus. Now, if we look at some stock specifics, do keep an eye on Apple suppliers. Most of them, like Dialog, Semi, AMS, etc., are all higher today on the back of a improved sales forecast from Apple overnight. Now, the concerns about the coronavirus are still boosting havens. We are seeing the 10-year Treasury yield currently down 3 basis points at 1.62% at the moment. The 10-year Bund yield falling more than 2 basis points to negative 36, and 10-year gilt yields sliding 1 basis point to 54 basis points at the moment. Now, the dollar is holding near 7-week high as investors wait for tonight's Fed decision. Dollar yen, meanwhile, ticking slightly higher, up 0.1% at 109.1. The offshore yuan gaining 0.3% this morning to 6.96. Sterling slightly lower at 130. The euro falling 0.2% at 110. Oil finally on the rise on the back of a drop in US inventory data. Crude, of course, has been suffering from some fairly heavy declines this week amid concerns about the coronavirus. WTI now up more than 1% at $54 a barrel. That's a Bloomberg Business Flash. Now here's Leanne Garens with more on what's going on around the world.
Sandra, thank you. The death toll from China's coronavirus has topped 130, with the number of cases jumping above 6,000. Governments are tightening international travel in an effort to stop the spread of the disease. The US and UK are telling residents to avoid all non-essential travel to China. Talks of bringing down German Chancellor Angela Merkel's government are beginning to now evaporate. That's as the Social Democrats prepare for coalition talks. In December, the party's newly elected leftist leaders were threatening to withdraw from the coalition unless Merkel agreed to massive investments. But when party chiefs meet for talks later, they will be about minor adjustments and not major shifts in economic policy. The SPD party is pulling back as it's too weak now to make demands. And tennis fans are calling it the Melbourne Miracle. Roger Federer saved 7 match points against Tennis Sandgren to move into the semi-finals of the Australian Open to face Novak Djokovic. Top-ranked Rafa Nadal has a tough opponent in Dominic Thiem later today. Global news 24 hours a day on air and on QuickTake by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Garens. This is Bloomberg Caroline.
Thank you so much, Leanne Garens, there with the world and national news. So our top story this morning, coronavirus. As Leanne was mentioning, the death toll climbing to more than 130. Airlines scrambling to cancel flights to China as the virus spreads. A cluster of people who have caught the disease in Bavaria, in Germany, and also cases in France and the UAE. So we continue to be concerned, both governments and corporations trying to respond quickly to this. Joining us in our London studio this morning is Colin Asher, who is the senior economist at Mitsuho Bank. A warm welcome to Bloomberg Radio. Thank you for joining us.
Morning.
We're trying to, a lot of companies and governments are trying to deal with the coronavirus. Is it too early to talk about what the impact might be in terms of Chinese growth, the impact on the global economy? We've spent so much of 2019 worrying about global trade, and now this potential pandemic.
I think it's a little bit early to have a clear view. I mean, I think obviously you can look back what happened, SARS, MERS, the avian flu, and these all provide potential templates, but exactly how this is going to play out, I think, is quite difficult. I think there are two things that are clear. Firstly, it appears to be quite infectious and to spread quite rapidly. But on the flip side of that, I think it's not quite as lethal as something like SARS.
What indicators are you looking at to potentially give you a gauge of assessing the economic impact? Is it consumption? Is it corporate behaviour?
I think in the first instance, probably we've seen this morning a couple of airlines have announced cancelled flights, and I think the first travel is probably clearly one of the first travel and tourism. Look at two of the areas which are likely to be hardest hit in the first instance.
Okay, so those are two sectors worth watching. Are you expecting, because the other big news for the markets will of course be from the Federal Reserve Bank, Jerome Powell, the decision there, and also the press conference. Do you think that Mr. Powell may well address this issue as a potential risk?
Yes, I think it's at the moment it's a clear downside risk, but the scale of that risk is very early to sort of put clear numbers on it. And I think at the moment it won't have a big influence in their deliberations this evening.
Yeah, and the market has brought forward pricing for a Fed rate cut this year. Would it be a policy mistake if global central banks, maybe more broadly than the Fed, emerging markets or other G10 central banks, signalled that they were ready to take a more dovish stance as a result of the coronavirus?
No, I think that if it's a clear potential downside risk, I think that signalling that you would do that if the risk plays out is a clearly sensible thing to do. I think for some of the central banks, though, and specifically I'm thinking about in Japan and in the Eurozone, I mean, how much lower can they push interest rates? It's clearly problematic. At Draghi's last meeting, he clearly said, I feel that we've done almost as much as we can. It's time for the fiscal authorities to shoulder their share of the burden.
Okay. Well, what about other issues then when it comes to the Fed? I mean, in particular, the balance sheet. A lot of market participants telling us that any clues from Jerome Powell about the balance sheet will be crucial. Do you think that he might do something at this meeting about perhaps signalling a scaling back in terms of the balance sheet?
Yes, I think that's certainly one thing that people will be looking for. I think the most likely thing that people are expecting is a small increase in the interest on excess reserves. Obviously, the Fed funds effective has been settling at the low end of the range, and I think there's clear effort to try and push that up. I think this is more a sort of a technical thing. I mean, for the big picture is that rates aren't going to change at this meeting, and generally speaking, are unlikely to change for a number of meetings. I mean, my expectation is that probably in the back end of the year they might push rates slightly lower because inflation remains, below target. And obviously, in that period, we will have the results of the review which is coming out. Generally, my sense is with regards to that review is that they're worried about inflation undercutting for prolonged periods, and one of the things they're considering is allow it to average 2% over the cycle, so allow it to run hotter if it's been cold.
Will we get a rate cut from the Bank of England this month?
I don't think so.
Why not?
I think, the last meeting was 7.2, so there's a couple of people are clearly concerned about weak growth, and the data we had earlier this month was extremely weak. The inflation data was very weak, retail sales were especially weak, and then you had the speech from Vliga who said this is, the data is very poor, and if it remains poor, I will vote to cut rates. Almost every data point that has come out since then has been on the other side. All the data that points to that has come out in the last week or so has pointed to a recovery from the election. The housing market data has been very positive. Retail sales data, the CBI distributive trends, the CBI industrial trends survey, the PMI have all been shown quite a strong bounce in the last in the post-election period, and my sense is that will be enough for them to hold off.
Okay, enough for them to hold off in the last meeting for Mark Carney as governor. What about this quote I picked up on? UK shares are too cheap to ignore, according to Morgan Stanley strategists. That Europe in aggregate may not look fundamentally cheap, but the UK does. What do you make of UK assets? Sterling, having said that, on track for its worst month against the dollar since July. It is, as you say, is the rebound there? Is it going to be of interest to investors to look more closely at the UK now, even though we're in a period of uncertainty still with the Brexit trade deal to be done?
I think in the short term, there's clearly a post-election bounce in activity. I mean, I think the question for sort of in terms of in the economic growth cycle is how long that bounce is likely to be. And the other question is clearly we have some stimulus. People are expecting some stimulus from fiscal policy. So there are a lot of uncertainties about the UK outlook. And generally, I think there's scope for some upside surprise. My own views about the bounce are that if you're a small business and you're mainly concerned about the introduction of hard left policies in the wake of the election, that risk has probably disappeared for you, and you are likely to probably resume capital investment. But if you're a large business, the trade thing is still very much front and center for you, and not a great deal has really changed in the past couple of months. So I would expect there to be a small bounce in activity, possibly running through the first couple of quarters of the year, and then in the back end of the year, I feel that the Brexit trade will come back and uncertainty will sort of... I don't expect there to be a lot of progress on the negotiations. I think that, again, it will go down to the wire.
Right. Does that mean we could get a BOE cut later in the year, even if not tomorrow?
It's certainly possible. My expectation is the bank will remain on hold for the entire year.
Okay. Great to have you with us. Thank you so much. Colin Asher joining us in the studio, senior economist at Mizuho Bank. And we are, of course, looking ahead to the Bank of England decision tomorrow, the Fed later today. So mustn't forget about the central banks. But in the markets, the preoccupation at the moment very much around coronavirus. But we're also in earnings season. So it's actually hard to distinguish what are the different push and pull factors on equities. Almost an hour into the equity market open, we're up 0.5% on the stock 600.
Yeah, indeed, although betting for that Bank of England rate cut continues to come down now, and the market's only at 40%. Coming up next, Anna Edwards and Matt Miller will be taking over here on Bloomberg Radio. Their guest, Stephen King, Senior Economic Advisor at HSBC. This is Bloomberg.
Investors who put their money on the line to help...
Boredom. Fitness enemy number one. So don't just run. Run. Mix it up. Skip. Run. Skip. Run. Give yourself a lift. Mix it up. Lift. Mix it up. Run. Lift. Splash. Skip. Lift. Run. It's crunch time. Skip. Mix it up. Run. Mix it. Add a boxing class. Skip. Run. Splash. Skip. Run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run. Mix it up. Skip. Mix it. Run.
Mix it. Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
A day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe.
What we're now seeing for the first time is this facade of absolute unity beginning to break down in the EU.
We expect that there will be some type of slowdown recession beyond 2019.
The European banking system, although recovering, hasn't recovered, and there are areas of fragility.
We've seen this before, trade talks that lead nowhere, and then tariffs. We just swing from one to the other, and markets get caught in the middle.
Bloomberg Daybreak Europe with Anna Edwards and Matt Miller on Bloomberg Radio.
Good morning from London. I'm Anna Edwards.
And from the Bloomberg Bureau in Berlin, I'm Matt Miller. You're listening to Daybreak Europe on London DAB Digital Radio.
It has just gone 9 o'clock here in London, just gone 10 o'clock if you're in Paris or Berlin. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. And European equity markets, Matt, to the upside. Stock 600 up by 0.5%. The FTSE 100 up by 0.3%. The CAC 40 up 0.5%. The Xetra DAX weighed down a little bit, and that market underperforms, up by just around 0.1%. US futures do point to the upside, so we are expecting to see a little bit of a bounce at the start of the US trading day. In terms of the sectors that are on the
the move then today. We see food and beverage, telecoms, oil and gas. They're the weaker ones. To the top, we see basic resources, banks, construction, financial services. All of those sectors, though, I should point out, are in positive territory. So what a difference a couple of days makes. And we now see a bit of a bounce going on for European equity markets after all the selling from last week and the early part of this week around the coronavirus. That's not to say that we've unwound all of those losses, because we haven't. We managed to lose from global equities $1.5 trillion worth of value between January the 20th and yesterday. So that's a lot of ground to make up. But markets do seem to have a different mentality today. Perhaps it's the numbers out of Apple that managed to focus markets' attention back on the earnings story and technology, because that had been sidelined, of course, in the run-up to the earnings season by the coronavirus. We also see a bounce in oil prices. Maybe the selling in commodities had been overdone. So the Brent price is now back over $60 a barrel. That's 60.06. The yield on the US 10-year also reversing some of the moves it made in the wake of the discovery of the virus. So 162 is where we trade. That's the handle, at least. So that is a little bit weaker than we saw yesterday. So that is interesting, actually, that we are seeing buying of stocks, and we're also seeing buying of treasuries, buying of bonds, buying of government debt, and the safety or perceived safety that brings. In the FX markets, the dollar is a little bit stronger. We have a dollar up by around 0.1%. The euro weaker by 0.2%. The pound against the US dollar fairly flat, down a touch, 130.17. Matt?
Yeah, I think that's a great point, Anna, in that, yes, we've lost $1.5 trillion from equity markets over the past since this coronavirus has been reported. On the other hand, a lot of that money is going places. It's not like it's just wealth destroyed, disappearing into thin air. And one of those places that it's going is into currencies. Let's bring in right now Chris Turner. He's the head of FX strategy at ING. And Chris, where do you see the movement? Where do you see the beneficiaries in the markets that you follow?
Yeah, sure. So this kind of starting point with the virus and impacting Chinese demand will clearly be the fears, just as it was for SARS in 2003. So initially, those economies most exposed to the Chinese business model, particularly like commodity producers, like China consumes half of the world produce commodities. So places like Latin America, Chile, Peru, Colombia is like energy, obviously producer. So Latin currencies, things like Australia, Canada, Norway, Russia, to some degree South Africa, the commodity producers under pressure. It's actually, I think, probably going back into the dollar. I mean, late last year, the dollar started to turn. The investors started to put money back to work into growth stories after the phase one trade deal, but now that's reversing. So I think going back into those safe havens of dollars and yen.
Dollars and yen, but is it? So I guess we don't look to dollar yen for any indication of that. If people are going back into dollar and yen, then dollar yen looks dull. Where looks more interesting then from a market moves perspective? Is it all about the Swiss franc? Is it about gold? Where do we head?
Yeah, the Swiss franc has been doing pretty well. So Euro Swiss has gone down to a new low below 107. And the big focus there has been for a long time, if you remember back in 2015, the Swiss National Bank exited a floor in Euro Swiss at 120 and the Swiss franc strengthened a lot. But they have been intervening sporadically since then. Early this year, the US Treasury produced a semi-annual FX report, a bit late, but it put Switzerland on its monitoring list, potentially for currency manipulation. So at the time, the market felt the Swiss National Bank's hands may be tied about buying foreign currency and limiting Swiss franc strength. So there's a bit of a story there that actually the SNB might be forced out of the market and the Swiss franc can strengthen a little. So that's one of the themes out there. But I think what we saw on Monday is sort of a brief correction in risk assets, but it feels like this will probably go on for another kind of 6 weeks or so. So I think like conservative plays in the FX market, we sort of repeat of last summer in a way, when we saw obviously the US yield curve flattening and growth expectations lowered.
Why don't we see more money going into gold, more money going into the Japanese yen? You've seen a big move in treasuries, but you don't see, I think, a coinciding move in the other sort of usual safe haven suspects.
Yeah, well, I think a very good kind of question. One of the issues that's really dominated FX markets, probably for a couple of years now, is the US rates. When the Fed was almost like one of the very few central banks to get a chance at normalizing rates before the trade war kind of broke out again, the starting point that we've got now is that US interest rates are still, at the short end of the curve, are still about 150 basis points, maybe 175 basis points, more than major sort of peer groups in the developed world. And that makes it, if you're a Japanese investor investing into the US, or again, a European investor investing into the US, it's very expensive to hedge that currency exposure. So not until US rates probably get another 50 basis points lower does it become more of a kind of toss-up between I'm prepared to raise my kind of hedging rates to hedge against a dollar decline. At the moment, it's just too expensive.
What about, you talked there about the dollar quite a lot, Chris. We've got the Fed meeting later on today. What are your expectations, or announcing the results of their deliberations? What is your expectation for rates? Clearly nobody, I think nobody expects any move in interest rate policy today, but what will the focus be?
Yep, so back in December, Jerome Powell said basically it's got to take a material change in the outlook for us to do anything more. We offered you 75 basis points of precautionary cuts, and actually the economy kind of looks okay. Inflation slightly below target, growth perhaps slightly lower than we would kind of like, just under kind of 2% potentially this year. But I think the starting point is it's got to take something large to knock us out of unchanged policy. And where we are today, US consumer confidence is still pretty high. Obviously, unemployment low. Growth may be a touch lower, but it's early days with the coronavirus. So I think the kind of starting point is that there's not really enough to merit a substantial change, and we wouldn't really expect any significant changes in the FOMC statement today.
All right, Chris, thanks so much for joining us. Really appreciate your time this morning. Chris Turner is head of FX strategy at ING. He was with us on television and now on Bloomberg Radio. With that, let's get over to Leanne Guerin. She's got your global news headlines. Leanne?
Matt, good morning. The death toll from China's coronavirus has topped 130, with the number of cases jumping above 6,000. Governments are tightening international travel in an effort to stop the spread of the disease. The US and UK are telling residents to avoid all non-essential travel to China. President Trump has announced his peace plan for the Middle East. He says it's a win-win solution that will make the region safer, but the Palestinians have already said it's a non-starter. The two-state solution would leave an undivided Jerusalem as Israel's capital. It would also give a green light for Israel to annex existing West Bank settlements. Jared Kushner, the president's son-in-law and a senior advisor.
Over the last couple of years, we've studied the issue, we've studied the region, we've consulted with all the different parties, and the biggest thing that we were able to do today is bring the Israeli government together to agree on different parameters to put a two-state solution option on the table for the Palestinians.
Staying in the US, President Trump's lawyers have wrapped up their defense at President Trump's impeachment trial. Bloomberg's learned that Senate Majority Leader Mitch McConnell doesn't have the 51 votes needed to block a call for more witnesses. Democrats are pushing to hear from former National Security Advisor John Bolton. And here in the UK, Boris Johnson's government plans to reclaim control over British fishing waters, with a law allowing the UK to decide who can fish in its waters and on what terms. Bloomberg's Sebastian Salek reports.
The legislation published today will end current automatic rights for European Union vessels to fish in British waters. That's according to the Department for Environment, Food and Rural Affairs. The UK will leave the EU's common fisheries policy at the end of December after an 11-month post-Brexit implementation period has ended. In London, I'm Sebastian Salek, Bloomberg Daybreak Europe.
Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Guerin. This is Bloomberg Anna.
Leanne, thank you very much. Now with your morning sports news, here's Joe Rawson.
Aston Villa are through to the final of the League Cup after Trezeguet's stoppage time goal gave them a 2-1 win against Leicester at Villa Park. That was enough to secure them a 3-2 triumph on aggregate and book them a trip to Wembley for the showpiece. Villa manager Dean Smith tells Sky Sports News it'll be a great occasion for the football club.
I thought it was a good game of football with both teams trying to win it, and we've had a couple of chances and they've had a few chances as well. So to go and get the win at the death like we did there, to be taking this club to Wembley, where we've got a great history and a proud history in this competition, I'll be a very proud man leading them out at Wembley.
While Leicester City boss Brendan Rodgers admits the defeat is a tough one to take.
I thought by the end of the game there was only one team that looked like they were going to win it, but we switch off from the cross and then the guy gets in at the back post and scores it. So tough one to take, because over the two games I felt we're the better side, but congratulations to Aston Villa. We have to move on.
Villa will face the winner of tonight's last four tie between Manchester City and Manchester United. Pep Guardiola's side lead their local rivals 3-1 on aggregate going into the second leg at the Etihad. Leeds United sit pretty at the top of the Championship this morning after they fought back from 2 goals down to beat Millwall 3-2 at Ellen Road last night. West Brom have slipped to second after they were beaten 2-1 at Cardiff City. At the other end of the table, Wigan came from behind to secure a 2-1 victory over Sheffield Wednesday, and bottom club Luton gave their survival hopes a boost with a 3-2 triumph against Derby. And Hibs are through to the 5th round of the Scottish Cup after they beat Dundee United 4-2 in their replay. Christian Doig scored a hat-trick to book the Premiership team a last 16 tie against BSC Glasgow. Falkirk are also through and will play Hearts in the next round after their 2-0 victory at home to Arbroath.
Got it. Now let's get the U.S. sports report. For that, we go to Pete Fox. Pete?
From the NBA scoreboard as the Kobe Bryant tributes continue. The Knicks have dropped 3 of their last 4 after losing to the Hornets in Charlotte 97-92. Julius Randle, another solid performance, 24 points. Terry Rozier would lead the way with 30. In Philly at Wells Fargo, the Sixers down the Warriors 115-104. Golden State now having dropped 4 in a row and 14 of their last 15. In Miami, the Celtics with a solid win over the Heat at the American Airlines Arena 109-101. Led by Gordon Hayward's 29-9. Jaylen Brown had 25 in the win. And in Milwaukee, if you're a fan of defensive-minded games, this one was not for you, as the Bucks down the Wizards by 20, 151-131. Bradley Beal with 47, only be outdone by Chris Middleton's 51-10. I'm Pete Fox at your Bloomberg NBC World Sports Update.
All right, so that's your U.S. sports report there. Now let's get you caught up on what you need to be looking at or watching for today. At 7 p.m. UK time, we're going to get the Fed rate decision out. Expectations are for no change, of course, but policymakers are likely to face questions on their plans for slowing asset purchases. So watch for that tapering discussion. Before that, the ECB Governor Council member Olli Rehn is going to speak in Helsinki, so watch for more ECB commentary. And then Germany's coalition partners are meeting to discuss possible changes to the government program. Plus, the U.S. Energy Information Administration will release its 2020 energy outlook and discuss its short-term views. When we come back, we'll get the view of Dan Moss on China's ability to fight the virus. This is Bloomberg.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Inovalon is a leading provider of cloud-based platforms empowering data-driven healthcare. Leveraging deep connectivity, the data of billions of medical events, and advanced analytics, Inovalon empowers the achievement of improved clinical outcomes and financial performance for thousands of health insurance companies, hospitals, doctors, pharmacies, and pharmaceutical companies, and the millions of patients they serve every day. Inovalon. Data has a story to tell. We give it a voice. Learn more at Inovalon.com.
You took the first step and quit smoking, but even former smokers may still be at risk for lung cancer. That's why SaveByTheScan.org wants you to know about a new low-dose CT scan that can detect lung cancer early. It takes only 60 seconds and could save your life. You took the first step, now take the next. Visit SaveByTheScan.org for a simple quiz to see if you're eligible and talk to your doctor about screening. SaveByTheScan.org is brought to you by the American Lung Association's Lung Force Initiative and the Ad Council.
Influential conversations from Bloomberg Television. Here's Paul Allen.
Let's get some more now on how the coronavirus is affecting markets. We're joined by Kamal Srikumar, Global Strategies President at Srikumar Global Strategies. Some very big catalysts here to talk about, haven't we? We've got that huge earnings result from Apple, but then on the other hand, there's a killer virus on the loose. So what is the bigger catalyst here in your mind?
First of all, beginning with Apple, since you mentioned it, Paul, the fourth quarter earnings that Sue talked about, the strong earnings numbers, is looking back. It was the fourth quarter of 2019. Now, as you look forward 2020, I think Chinese growth was slowing, and as a result of the coronavirus, there is probably going to be even further slowing to the extent of as much as 0.5 percentage point on the Chinese side. Particularly affected is going to be the consumer sector as a result of what you see taking place with respect to all of the difficulty in reaching your store, traveling from one place to the other. So we still don't know what the impact is, but China-oriented companies, particularly with Apple being one example, are all going to be this is something they'll have to deal with during this year.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in London, I'm Anna Edwards with this Bloomberg Radio Business Flash. European equity markets then bouncing this morning, putting on some gains, so up by 0.4%, off session highs, just coming off a little bit in the last 15 minutes or so. But the FTSE 100 up around 0.1%. The Xetra DAX is fairly flat, flirting with that flat line. The CAC 40 in Paris up by 0.3%, so getting the best of the gains of those major markets. We also see some gains at the periphery with the IBEX and the FTSE MIB both up by between 4 and 0.5%. US futures 2 point higher, but perhaps those futures have been moderating back a little in the last half hour, and so we see US futures up by between 1 and 0.3% for the major markets. Interesting to see Nasdaq futures up by 0.25%. Of course, big focus on tech stocks over this 48-hour period, as we have a number of big tech names reporting. In terms of sectors moving around here in Europe, basic resources, the biggest gaining sector, closely followed by financial services and banks. To the downside, telecom, oil and gas and food and beverage. So telecom is certainly the biggest losing sector in the European equity markets today. And in terms of the stocks that are leading us to the downside, we've got KPN, which is the biggest faller in the telecom space, down by just over 7%. Telefonica also in negative territory, but KPN is the big faller there. In just checking a few other assets, $60 a barrel for Brent right now. The yield on the US 10-year 1.61%, and the dollar is fairly flat. A little bit of weakness on the euro. That's a Bloomberg Business Flash. Now here's Leanne Gerrans with more on what's going on around the world.
Anna, good morning. Talks of bringing down German Chancellor Angela Merkel's government are beginning to evaporate. That's as the Social Democrats prepare for coalition talks. In December, the party's newly elected leftist leaders were threatening to withdraw from the coalition unless Merkel agreed to massive investments. But when party chiefs meet for talks later, they will be about minor adjustments, not major shifts in economic policy. The SPD party is pulling back as it's too weak to make demands. The US says it's developed a promising vaccine for African swine fever. That's a disease that's devastated hog herds in China, the world's biggest producer of pork. The US Agricultural Department says the vaccine has proven 100% effective. And tennis fans are calling it the Melbourne Miracle. Roger Federer saved 7 match points against Tennys Sandgren to move into the semi-finals of the Australian Open to face Novak Djokovic. Top-ranked Rafa Nadal has a tough opponent in Dominic Thiem today. Global news 24 hours a day, on air and on QuickTake by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It's just gone 9:20 in the city. Time to check in with Bloomberg Opinion. We're joined by columnist Daniel Moss, who's writing about the tools China has to deal with an economic slowdown caused by the coronavirus outbreak, or the fight against the outbreak, really. And Dan, you point out they're in a much different situation than they were when they needed to re-stimulate the economy after the SARS epidemic.
Yeah, Matt, there are a couple of reasons why the SARS analogy, which is employed pretty wildly, is problematic. One is China is a fundamentally different economic animal in terms of its policies, in terms of its composition, and in terms of its size. The world itself has changed around China. Matt, you and I have worked together for many years. Let's go back to 2003. China had a fixed exchange rate, inflexible, pegged at 8.3 to the dollar. It remained that way till 2005. In 2003, it had been a decade since China had used interest rates to modify its economy. It uses monetary policy and exchange rate policy quite a lot these days, so that's changed. Look at the global economy in 2003. It was gathering steam after a pretty shallow, relatively shallow recession in 2001.